Hi everybody, Natasha Koch here with the Van City Home Team live on Thursday with the Van City Scoop. How's everybody doing today? I'm having a little bit of a holiday, but I still wanted to make sure that I attended a live, and today's topic actually is kind of fitting because the topic today is declaring foreign property on your tax return. So as I cheers you on my foreign property. Hi, Kim. Thanks for joining. So we're going to talk a little bit about it. Often the topic seems to be what foreigners are responsible for as far as paying tax when they buy in Canada, but not a lot of us, hi Kevin, not a lot of us actually take into consideration what the ramifications are of us buying property outside of Canada, or what property is actually considered in income tax standpoint. So let's talk a little bit about property tax. So based on, well, one of the main things actually is essentially it comes down to whether or not you're a Canadian resident or if you have Canadian citizenship. So there's a really big difference. If you reside in Canada, you're required to pay, you're required to do a tax return. And on that tax return, you do need to declare any income from outside sources. And so declaring foreign property, there are some rules that you have to follow. And one of those major rules is that the property value you have to declare after it, what's in the glass? Well, it's lemonade. So one of the things is that the property is in excess of $100,000. So if you own property over $100,000, then you do need to fill out a form that is called a T1135. So since 1997, actually, it was a requirement to file this on your Canadian tax return, and a lot of people don't know that. And actually, one of the penalties, if you don't declare any foreign property, is up to $25 a day for non-disclosure of it. So it's kind of important, and there's a lot of ramifications, obviously, if you don't. And so let's talk about what property, specific foreign property is. And it doesn't necessarily mean real estate. In a lot of cases, it does. People own properties, you know, in the US or in Arizona or in Mexico. But it also includes life insurance policies, or offshore mutual funds, or real estate, as I said, outside of Canada, money in a foreign bank account, shares in a foreign company, bonds, any other income in any other foreign country. So as long as the cumulative amount is less than 100,000, then you're safe and you don't have to make a declaration, but if it is over, you definitely do. So what doesn't need to be declared, there are a few items, so you are in luck if you own an automobile or a cottage or paintings or jewelry outside of Canada. So let's say, so mainly hi Melanie, hi Bear, hi Andrea, thanks for joining. So one of the main things is that you have to be occupying it for personal use. Another thing is if you own a business outside of the country, you don't have to declare the building itself or the products that you use. You do, of course, have to claim the income from it on your Canadian tax return. So today's going to be a short live because I'm on a little bit of a holiday, but I did want to share with you some interesting facts about declaring foreign property tax returns. So for those of you that are interested in buying a property outside of Canada or doing any kind of investment, make sure that you talk to your accountant and find out what the ramifications are, or how much you would actually be taxed based on your investment. So we'll see you guys all next week, where I will be back in town and ready for action. And I hope you guys have an amazing weekend. Talk to you later. Bye, guys.